Okay. Bob Chapman is our guest. I really appreciate him coming on with us, international forecaster, theinternationalforecaster.com. We have links up to it on Infowars.com and prisonplanet.com. He has, of course, one of the biggest newsletters in the world. He previously had the biggest newsletter in the world until he retired. Then he came back into it, and he's been spot on all along. Bob Chapman, thanks for joining us.
Well, thank you for having me again at these exciting moments.
All right, let me just in layman terms put out what I see, and then I want you to break down the basics and then flesh it out, what you forecast in the next week, the next month, the next year, basically where the trends are going, Bob. First off, if we have inflation way above 10%, we have now the Fed saying 75 basis points. That's going to further erode the dollar's world reserve currency position. Even though they did this, the stock market still is down from Friday, of course, closed on Martin Luther King Day. My info is the globalists are orchestrating this as a consolidation from the highest levels. The Financial Times of London, of course, are saying that. And that this is a program so that foreign interest can come in and buy up what's left, not just of the U.S., but Canada, Europe, for pennies on the dollar, but that people from millionaires up to billionaires, it's still going to hurt most of those individuals.
Well, first of all, we predicted that something like this would occur. This is a stopgap measure. The reason why is that they have not been able to solve their credit problem. They have a full-blown recession that's really been coming on for 2 years. They finally have had to recognize it. And this past weekend, or this past week and weekend, others throughout the world said, no, this is not going the way that it should, and we're going to be sellers. And yesterday, in several programs that I was on, I said that I felt today when the market opened in the United States, yes, it would open down 500, and that the working group and financial markets would come into the market either before or just after the opening and try to keep the loss at between 100 and 200 points on the day. And in the gold market, that they would gold was off in the access market, which is very thin yesterday, 1710. In London, it was off about 990. And I predicted that gold would come in off today and then go to even and end the day either even or up $5 or $10. And this is exactly what's happening. I think that the timing on this was very important to these people. If you saw the pep talk this morning on CNBC from the U.S. Chamber of Commerce by Paulson, and that was followed by the 3/4 of a point cut. And that was what was used as an excuse to take the market back up, so to speak. And the market will probably meander in this area for a couple of days, and then it will start to slowly seep down further until it reaches some level. The earnings that can be coming in this month and next from the past year, they're all not very good. And the second quarter, which will be April, they'll see the earnings from the first quarter, and then they're going to probably be worse. I projected no growth for the U.S. economy for this year last November, and incidentally, I was right on the year before as well, 4 to 6% growth, and the experts said 13.5. And so we have a market that's probably going to base out somewhere between 10 and 12,000, for lack of a number, 10,000 to 10,300. And once the bad news is out on the first quarter, the market will consolidate and probably move back a couple of thousand points to the upside on the Dow until the election, unless some untoward event happens. I think that's what their plan is. They knew what they were going to do over the weekend and today, and the market being down was a perfect excuse for them to cut 3/4 of a percentage point rather than a quarter or a half.
Now that's that's an extreme move. People were predicting a quarter, and they did 3 quarters. That must have meant that they knew that a really strong incentive was there to boost that market.
Well, I think they were instrumental in taking the market down. And I think they did it so they could cut off 3/4 of a point because they're in serious trouble. And this cutting of rates is not going to do a great deal. It'll allow business to borrow more cheaply, but it's not going to help the housing market much because lenders are being much more cautious than they were before. And a president making an $800 per poor family check to them so that they can make it through this rough time. The force of that will last 3 or 4 or 5 months. That'll be the end of that.
Well, I remember. Well, the inflation, it's almost nothing. I remember getting a $100 check from Bush, and my girlfriend got one. Now my wife. At the same time, right after 9/11, it was like a joke. It's like a mafia boss. It's the same thing they do in Iraq with planes flying over, dropping out $100 bills. It's a total gimmick. With massive inflation compounded, really raping people on fixed income, Social Security, with all the credit card debt starting to come due now and accelerating to the next 2 years, with all these other debt structures falling apart, AAA rated bonds and corporate paper securities that were filled with junk. I mean, what do you see on the ground, not just with the markets or dollar value? I mean, things are already bad in the economy. They tried to cover that up, as you said, but the fundamentals are so bad. I mean, I see things deepening. I mean, they tried to say it didn't exist. Now they're admitting it exists, so it's accelerating it. And they've gone from 2 weeks ago not saying that, saying that there was no recession to saying we're in a recession and it could become a depression. When I start hearing depression on CNN and the McLaughlin Group, I get worried, Mr. Chapman.
Well, you should be, and everybody else should be, because that's exactly where we're headed. Again, more stopgap procedures. The economy is going down. I saw for the first time in one of the major news services, they were talking about people who were laid off and had collected checks for unemployment for 6 months, and they said that they are no longer counted. And, that's the first time I've seen that happen ever. And that's why my unemployment figures are 14% and not 5%, because the government lies about everything. The CPI, which is the inflation figures, they're calling it 4.3 and a core of 2 3/4, and I'm calling 11.6. The Fed won't publish M3, but myself and 2 others do, and it looks like this month's going to come in somewhere around 15 3/4 to 16%. That would be for the previous month. And so the money and credit is flowing. Every 2 weeks they have a $30 billion auction, which the money secretly goes to banks that need help. And what's happening, instead of the money being paid back after 10 or 30 days, whatever the term is, they're just rolling it. And so all this monetization that's going on has got to turn into inflation, which is offsetting some of the deflation that's happening within industry, within the economy, within real estate. And they're going to have to continue to upgrade the amount of money and credit that they create, because if they don't, deflation will grab hold and the whole thing will just drop out. And so they've got to continue to inflate, and gold and silver have got to continue to go up.
Exactly, but then when the economy finally stalls, which it's now starting to do, and when all that inflation, finally comes home to roost, it makes it that much worse when the jig is up.
You're absolutely right. The famous newsletter writer Harry Schultz coined that term stagflation many years ago. It's the stagnation of the economy and inflation at the same time, coming out with a new word, stagflation. And that's exactly what we've got already, and it's going to get a heck of a lot worse. And that's why people should do every effort that they can to get out of debt. And if they're going to invest, they should be in gold and silver-related assets, because this is just the beginning. We've got a long way to go yet.